There was a time when Mullen Automotive caught my attention, not because it was a blue-chip stock or a Wall Street darling, but because it was a speculative play with just enough promise to make you curious. The kind of company you might root for, even if the odds were stacked against it. Electric vehicles are the future, that much isn't in question. And Mullen positioned itself as a bold underdog, rolling out vans, forming partnerships, acquiring assets, and promising that production was coming soon. For a time, it felt like maybe, just maybe, they were getting closer to something real. But fast forward to now, and the stock is trading at around 11 cents. That's post-reverse split. And not just any reverse split. This company has done it again, and again, and again. It's becoming part of the playbook. In fact, Mullen has now executed 4 reverse stock splits in just 2 years. Think about that for a moment. The most recent one, in February 2025, was a 1-for-60 reverse split. You needed 60 shares to get just one. And even that one share has lost most of its value since then. Now reverse splits are supposed to help a company meet listing requirements. But when they become routine, it starts to look like a band-aid over a much deeper wound. I always saw Mullen as speculative. That was never hidden. But what gave me pause, what ultimately pushed me away, were the choices made behind the scenes. The options they used to raise capital. The repeated dilution. The convertible notes. The toxic financing structures that punished retail investors again and again. And then there's the board compensation. Lavish stock awards to executives while the stock price crumbled. Performance metrics that rewarded failure. It painted a picture. Not of a company fighting to survive, but one milking its narrative to stay afloat. And let's not forget the media environment. When prominent YouTubers raised red flags, when they questioned these very practices, they were silenced. Some received legal threats. Others were hit with takedown notices. The message was clear: keep the criticism to yourself. That's not how healthy companies behave. Especially not ones with nothing to hide. To be clear, this isn't about hating Mullen. I wanted to see it succeed. We all did. The idea of a small EV maker rising up against the giants, that's a compelling story. But what we've been watching isn't a comeback story. It's a slow, brutal unraveling. In the last reported quarter, Mullen brought in just over $3 million in GAAP revenue. That's up from the previous year, sure, but at what cost? Layoffs are now underway. Facilities are being consolidated. The company is in survival mode. And as all this unfolds, a class action lawsuit is looming. Alleging securities fraud. Alleging that investors were misled ahead of the last reverse split. There's still time for shareholders to join that action, and many already have. So where does that leave us? Some still believe in the turnaround. Others, like me, are watching from the sidelines now, not bitter, just realistic. This is what happens when you burn trust. When your financing comes with poison pills. When your board gets rewarded for underperformance. And when your critics are told to shut up rather than engaged in open dialogue. Mullen may still have something left in the tank. Maybe. But right now, it feels like a company that's out of road. This isn't financial advice. It's a reflection, from someone who once saw a glimmer of possibility and now sees a cautionary tale. If you're still holding MULN, I genuinely hope it turns around. But for me, this is one speculative bet I've walked away from. With a lot of lessons, and not a lot of gains.